What are candles and how are they created? For somebody that has never traded before, thought about it before, or even been introduced to it before. The main thing that I love about trading is it's really learning a different language. When we come to these charts, there's not a lot of words that we see. We see candles. That's it. How are these candles created? Going back to school, if we look at our X and our Y axis, we have time on the bottom and we have price on the right. Time and price must be what creates these candles. Right now, we're on the 1 month. Let's just call it January 1. January 1, we're going to open a candle. This candle is going to go higher. That means that the price is higher than where it opened. As y'all can see, the price is going up as this candle is being created. The higher we get, the higher the price is. Now, this candle is going to be open for the next month. It's going to be open until January 31st, and it's going to close at 5 p.m. This candle is going to go higher. Now, depending on your chart, depending on your settings, if it's above where it opened, it's probably going to be green. This is what it's going to look like. If the price ever starts to come back down within that month, it's going to start to leave a wick. As this comes down, this wick is going to start to get created. What this wick is telling us is that within this month that we're in, price action has opened. We have traded higher and we've come up to this price level. If we look over to the right of 35.44, but now we've started to move back down to the downside. And as we're moving down to the downside, this wick is going to get longer and longer. This is allowing us to see that price action has been up there within whatever amount of time we're looking at on the chart. We're on the 1 month, so this is telling us within 1 month we have opened, traded all the way up to the top of this wick, and now the price is starting to come back down. If we ever get below where we opened, it's not going to be a green candle anymore. This candle is going to be red or a different color. What this is telling us is that the price is now lower than where we started this month. So same thing will happen. If price comes lower, we're going to see this red candle. If price now starts to buy back up, it's going to start to create that wick once again. Now we're trading higher and we're leaving behind this wick. So now January 31st, 5 p.m. happens. This candle closes. This candle, now that it's closed, tells me because it's red, we opened at the top, price went higher all the way up to 35.50, whatever this is, right? 35.50. Price comes down, we're selling. Price is getting lower, 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 price is getting lower. We come all the way down to 25.50, and now it starts to buy back up. It closes at 27.35. This tells me that at the end of January, we closed lower than where we opened. This candle has now been created. Now February 1st comes, process repeats itself. We should open the next candle where the previous one closed. So now we're opening the candle here because this is where the previous month closed. So now February 1st, we're opening at the bottom. If it comes lower, same thing. It's gonna be red because we're lower than where we opened. Price action came below where it opened, and now it's starting to trade back to the upside. If it's trading to the upside, now remember, If we're above where we're open, that candle is now green. So what does this tell me? Within this month that we're in right now, February, we opened at the bottom, price came lower than where it opened, and now it's buying, it's going higher. We're going higher, going higher, going higher. The value of gold is now above where it opened at the beginning of this month. Now, if it sells back down some, once again, what's gonna happen? It's gonna leave behind some wick. Boom. It closes. We have another monthly candle close. February 28th or whatever the last day of the month is, at 5 p.m., we will get another candle close. Now, it's green. So what does that tell me? That tells me that February 1st, we opened at the bottom, price went lower, we bought up all the way to this high, we sold back down, price got lower, and then we closed. So did price close higher than where it opened? Yes. Think about it. If I literally bought gold February 1st and I held it till February 28th, 29th, the value of that gold that I bought has now increased. That's what this is telling me. Your charts, before you make them yours, they're probably gonna start out green and red. Coming over to my chart, I have gray and dark gray, or gray and black. For me, I understand that my lighter gray candles are closing higher than they opened. So if that candle is closing higher than where it opens, we're gonna call that bullish candle. We'll call it a bullish candle, call it a up candle. Essentially, we're just understanding that the value of gold closed higher than where it opened. So now the darker gray or the black is a bearish candle, down candle, which means we closed lower than open. For me, I think bull buy. So when I'm thinking bullish bearish, I always relate the bull to buy, BU, buy, BU bull. And then the other one is bearish. Let's look at the last 2 months. So I'm gonna pull up this black line and it's going to tell me where we opened and we closed. So now, if it's the dark gray, I already know we closed lower than where we opened. So if this is dark gray, we have a high and a low where it opened and it closed. Well, if it's dark gray, I know it opened at the high. That number is 2673. Now, if you just held that gold to the close of that month, it was at 2641. So the value of gold actually closed lower than where it opened. But now the very next month, we open up at 2641 and it closed at 2740. So the value of gold has now closed higher than where we just closed in the previous month.